for all my U.S. based traders. Hope y'all had a wonderful Thanksgiving. Won't waste too much of y'all's time today, and I appreciate all of you who are joining and who all go to do the recap, looking back on the saved and stored videos. Oh, let me pause this. All right, so as always, let's just go ahead and dive in before we go to fundamentals. Anything just so we can recap on what we went over last week. Let me do this right here. And let's just take a moment of silence and appreciate the beauty of gold. I don't know if any of you guys joined me in on this trade we discussed last week. And obviously, I know many of you, especially on any Surge Trader accounts, you guys don't hold a lot of y'all's trades. But for me, as a swing trader, I like to, if you're really looking for the longevity of trading, you're going to want to break past that 1 to 2 day marker, because as you can see, the movements take a little bit of time, like anything, patience, perseverance, and you can see how it plays out. Got in on this entry here. We discussed this on these levels on gold, and just for anybody who is in here, I will remove all these drawings. We're going to go over every single step on where, why, and how I found these entries, what I look for on a day-to-day basis. Not necessarily day-to-day for me. If I've already got everything marked up, then I already know what I'm looking for going into that week. So obviously, we'll just do this real quick. You guys know I look for this. Super simple. It is the break, hook, and go. Whether I'm buying or selling, super simple. And there's not a lot of chaos when you're looking for this strategy. It's just what we cannot determine, what we cannot anticipate, what we cannot control is the sideways movement of the market. So regardless of what we're looking for, we can't control this area. And so the break, hook, and go doesn't necessarily always look just like this. Like, we're never going to get perfect textbook examples, but sometimes the market does play out like that. As you can see, we were already discussing buys. Even out now, I was looking for my second entry. I apologize. There's an airport right here. We flying around, but I looked for my second entry to scale in here. Gold moved around sideways, and I should have known better, obviously, because we had a bank holiday, Thanksgiving, and so the market was fully shut off, and normally it takes 2 to 3 days to recuperate from that. And then we had Cyber Monday, so there's a lot of things that affect the U.S. dollar and the economy, and that plays a huge part in anything correlating with the U.S. dollar. But let's go over this real quick. Current price, we see we broke 2030. We are reaching for our highs like we discussed weeks ago. And you guys can see all these, look at every single one. Every one of these trades from this point, I think this point forward, was discussed on the lives. And as you see, my final target, this is the trade I held for a few weeks, showed you guys the trades, showed you everything, my profits, all that good stuff. But you can see it plays out, literally. May not be too exact my levels, but plays out to a T. And this is why I like gold, because once you find a pair that you can just really communicate with, and you create that relationship that you know the times of the movements, and it doesn't necessarily have to be all the time perfect, but it's like if you want to pick UJ and you understand when the market opens, how it reacts, when the market closes, how it reacts, when there's the swap, when's this, when's that. You start building a relationship with that pair. And a lot of you guys, you're trading like 20 or 30 different pairs, just reaching for different trades. You're creating too much chaos for your trading, especially whether you're going into a Surge Trader account and you're trying to pass an audition, or you've already been funded. The key to keeping consistency in a sustainable trading account is patience. I say this every time, and I will explain this every single live, any video, any message you guys send me. Patience is key. Patience is the number one thing that separates. And this goes for anything in life. You can apply this to anything. It doesn't have to be just trading. You have patience. You have the ability to start controlling everything in that. Your emotions, all the things, all the fundamentals of trading, your emotions, your psychology, everything like that. That's all categorized inside of patience. So anyways, I'm going to break this down real quick. Well, let's do this. Let's switch this and let's go over some fundamentals for this week. Let me stop and start sharing the fundamentals just so we can take a look at this, because a lot of you guys, I am not a fundamental trader, although I understand that news does fluctuate the market, obviously. So for this week, obviously, we've already got some news coming out. We had FOMC member Waller speak. We had some stuff that could have been potentially negative for the U.S. dollar, could have been good for the U.S. dollar. We also have, for the Aussie dollar at 7:30 p.m., we have CPI, which is huge. That is, and if you guys are not familiar with Forex Factory or any fundamentals for Forex, I like Forex Factory. We have no affiliation with them. I just like it because it's clean and clutter-free. You guys know how I like my charts. Same with this. You can literally go to here. Now, when you originally go to Forex Factory, or I'm pretty sure they're all going to be like this, you're going to have all the folders. You can literally go to this little flag here, and I only highlight the medium and the high impact folders. Not saying the low impacts don't affect, because I've seen where low impacts completely shift the market, but 9 times out of 10, it's the medium to high impact news. You're going to see the CPI, the FOMC, the unemployment claims, and stuff like that. That's the crucial components for the fundamental side. So looking on this, we have Tuesday coming up. Again, we have the CPI for Aussie dollar, very high impact. So if you're trading anything correlated with the Aussie dollar, and I don't know all the pairs. Like I realistically only focus on gold and some USD pairs. And although I do like GBP, JPY, or GBP, NZD, there's so many interconnected pairs that affect everything. So Aussie dollar news somehow could affect something with the US dollar. I don't understand how. That's why there's so much. When you dive into the fundamentals, it's just a huge rabbit hole of what you're looking for and what you're trying to dive into. So for me, I stick to 99% technicals, and that's it. Coming up for tomorrow, November 29th, we have some high impact Euro news. We have some pretty significant US dollar news. And then at 10:05 a.m., we have some GBP. Governor Bailey speaks. I'm pretty sure I've seen that shift GBP pretty significant. So pay attention to that. Thursday, November 30th, we have some more, looks like some Euro news, some CAD news, and some unemployment claims, core PCE price index. Oh, and I forgot to say this. When you go into these, you can always just click this open detail if you don't understand, because even me, trading 8 years, I don't know half this stuff. You just click this folder, and it literally tells you word for word. Why would a trader care about the core PCE? It's the Federal Reserve's primary inflation measure. Huge. That is very significant. Inflation is important to currency valuation because the rising prices lead to central bank to raise interest rates out of respect for their inflation containment mandate, meaning it can control the price and the forecast of that economy, of that current pair. So if this is for the US dollar and this is the news for that, huge. So let's see, usual effect, actual greater than forecast is good for the currency. So if this news comes out and it is better than the previous or the forecast, then obviously US dollar is going to gain some strength. But as you guys looked at gold, I don't see, and somehow this always works out. This is why I love technicals, because when you get pretty precise on your levels and all that stuff, you'll see how fundamentals it's like a building block to your technicals. Now, there are a lot of times where news can be wonky and we're on a bullish trend and price is just playing against the levels perfectly. News comes out and then it just completely what I call whipsaw, where it just goes crazy. And then, boom, it gets back in line. So, and let me say this, I don't know how many people are on here, I can't see, but please, if you are in here, feel free to send me any messages, because I have the chat where I can see you guys. Whatever you ask me, I don't care if it's about trading or not. Try to keep it kind of trading related, but please ask me any questions, because it gives me content. It's very hard to just sit here and talk to myself, so I definitely appreciate it, and I love all of y'all anyways. But anyway, ending the week on December 1st, we have some pretty high impact, obviously some very high impact CAD news, unemployment rate, employment change. Yes, sir, Carlos. See, I told y'all, if y'all don't listen to anything, pay attention to how I try to tell y'all how to trade gold. And we're going to go into that. That's why And for any of you guys that don't trade gold, if you do like US 30 or NASDAQ, anything like that, I love marking up is the same for anything, whether it's stocks, whether I don't care what it is. If I can see a graph and charts, I can mark it up. But I love gold. I've had a very long lasting relationship with her, and it's been good. And okay, so ending the week on December 1st, we have one of the most chaotic impact newses of all time besides NFP, FOMC, and that is Chairman Powell speaks. When he gets on the mic, it's like when Trump used to tweet. It completely sends a ripple effect to the US dollar. So, best advice, do not trade on Friday. If you want my honest opinion, Thursday and Fridays, especially on the end of the year, we're already in the holiday season. I had a friend that used to work for hedge funds in New York, and he told me that from October to December and to mid-January, the markets are almost on a automated AI, which we already know they're ran by that, but that most of the banks, that's the vacationing times. That's where most of the people who control the money, they're all on vacation, they're out traveling, they're doing their things, and the market is on autopilot to just be cautious. And not necessarily, you don't have to stay out of the market, just be cautious, because when it's on autopilot, it is built and created to, based off our human emotion, to completely wreck us. So obviously on the holiday seasons, November, December, we're getting close to the Christmas, New Year's, step back a little bit. If you're so like oh, I got to make some money to buy Christmas presents, all that stuff. You think that they don't know that, and that they don't know that you're not going into it with those emotions. So forewarning, take a step back, lower your lot sizes, stop trying to save the world overnight and be a billionaire. It's not going to happen. You're going to get wiped every single time, and then you're going to sit back and you're going to think, I knew what I was doing wrong, and I still did it. I'm sick of this. I'm done with this. All you've got to do is just shift that mindset a little bit to understand where you're not going to just hit a home run every single trade. You guys have got to get out of that mentality. Lewis, it's okay. Closed early last night. It's all good. I bet. Did you make profits though? Let me know. If you made profits, then closing early is fine. You just got to get used to holding it a little bit longer and learning how to control yourself on that roller coaster. Highs and lows. You all know this. So yeah, anyways, very high impact news. When Chairman Powell speaks, you guys already know. You see the memes, like this dude's crazy. I don't know what's going on, what he does, but see, made profits. Then how can you be upset? Don't be upset about that. There's always going to be another day, another trade. If you close out in profits, that's a beautiful trading day, because you guys put this in perspective. 99% of 401ks, CDs and stuff like that, 2 to 3 years, they make 2 to 3% a year. And you guys are aiming for 20% in a day. And you know why that is? That's because 90% of you who even learned about trading learned off these fake people off Instagram and social media that you can make millionaire, or you can be a millionaire overnight. You can buy a Lamborghini with the profits for day one, this, that, and other. And it's nonsense bullcrap. Not saying that some of you can't get lucky and you're gambling and you throw a 40 lot on USD and news hits and boom, you just hit 30 grand. You won't keep it. You won't keep it. 90% of you wouldn't withdraw that. You're thinking, I just made twice as much as my annual salary or whatever in 2 days. And instead of withdrawing that or using that as a cushion to continually trade, you wipe it because you think you're going to hit the next trade and the next trade and the next trade. And you don't think that you think you're good enough to where you're not going to have losses in a game where it's 50-50 every single trade. So one day you guys are going to start listening. All right, done with the news. Let's stop here. And I will share this. Let me go to a clean USD. I think it was this one. Yeah. Now see, I think this is the one we used on the live, what we were looking for. But I'm going to do this. I'm going to remove all drawings, and we're going to go back to ground zero. Now, again, please, you guys, I don't care what it's about. Give me, like, if you've got something on your mind, if you're wondering about something or you're not sure, put it in the chat. Let me know. Because I'm going to do what I know how to do. Consistency. Every single live, I'm going to show y'all how I trade. How you take the information is completely up to you. All right, so what I do on any pair, every pair, what I've done for the last 5 years, only thing that changes is I fine tune this a little bit on my entries and stuff like that, but it is the same thing, same parameters every single time. Nothing changes. I'll start with 0 indicators. The moving averages are there just to throw a lot of people off on my Instagram because everyone's wanting to know like how I trade this and other. I do not use any indicators. I do not use Fibonacci's. I do not use anything because they are built for 25 years ago based off stocks and different things. They were not built for the Forex markets. Everyone's like, oh, but this is the same thing. It ties right in. No, it does not. It lags, as you can see right here. Just, I know we're kind of going sideways on this, but just trying to explain to you why I don't use indicators. A lot of people will say on moving averages, they use a moving average as a confluence when they're looking for their entries and stuff like that. And they'd say, I wait for my moving averages to cross before I get in the sell. Well, if you waited for the moving averages to cross, this cross right here only shows when price is right here. So you got in a sell and boom, price went completely against you, went over 100 pips against you the second you got into that sell. But you were looking for a confluence of the moving averages crossing. Indicators lag. Current price, you can see these moving averages are nowhere near each other. Now they are going up, but they can instantly go down. They are based off a moving average. Now, right now I have them on 50 and 20. That means on every, it's an average of 50 candle closures. So that EMA is based off all of these, and then this one's a 20. All of those. Stop using indicators. I wish you were here to get the signal. Well, I cannot give signals, but what I can do is give you the book on how you can create the signals yourself, and you have all the fundamentals. You have everything in your backpack ready to go. You guys just got to really. I'm gonna try to. This is a horrible word, but I'm gonna dumb this down the best way I can. And let's do. It is 11:18. Let's do 5 minutes. Watch this. Higher time frame, monthly. Switch to the candles. Go to your line chart. Based off current price action. Only look on current price action. Don't care about nothing way down here. Only right here. So we're looking for peaks and valleys of the line chart. Now you don't want to completely clutter your chart, but let's just do this. Current price action's right there. So let's do that. We got another one here. We got another one here. And what I look for on the peaks and valleys, how many touches on those levels. Excuse me. That's going to tell you a lot once you go into candles on the lower time frame, the significance of that zone. Let's do one more, maybe right there, just because I see something wonky happened. And then we'll do one more right here. Boom. All right. Let's go down to the weekly. See anything more? Could probably put one right here. And one right here just to make it a little more asymmetrical. Looks good. Boom. Daily. Could put one right there, but I don't want to clutter it up. Down to the 4 hour. Looks great. Boom. All right. We have our zones. Why are these zones? Why do I call them zones? I call them zones because where current price is based off previous history, how many times that zone was hit. So at 1984, price come up, boom, 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 every single time. So this when price hit that area, it reacted. That makes it a very significant zone. So 1984, it was hit almost 40 different times within from 2021 to current price action. Over 40 times. That means that is a very significant zone. That whatever with gold, the way this works is when it hits a certain price, that means it's almost like the levels of the economy. So if its price is right here and it is reacted towards that level, you're going to see different reactions based off the economy. Now, if gold's going up and we're reaching new highs, What does that mean? Well, we have elections coming up. We have a lot of, I'm not going to say chaos, just a lot of world-changing events coming up. So that could be the next shift, the next rush of momentum for the economy or for gold. All right, anyways, we have our zones. I'm going to switch to candles, and you're going to see just how beautiful price reacts to these. I didn't look for anything crazy. I didn't look for the wicks and the bodies. I know a lot of you guys like to, you try to create this huge story, and all you're really doing is completely complicating your brain, because we can only handle so much information already, and just looking at plain charts with no lines is enough to make your brain stress. So try to keep it clean and clutter free. You're going to add, let me just show you guys, because this is what you guys do when y'all send me stuff on Instagram. This is what your charts look like. I see this. I don't even have Fibonacci on here, but I'm going to see this crap all over here. And let's do one of these. I don't even know what this is. Look at all that. Like my brain cannot comprehend this. I've been trading for 8 years. So you going into it for the first 2-3 months, you create all this chaos. Don't do it. I think I can do this right here. Yeah. You want clean and clutter-free charts. And then you want to go ahead. This has nothing to do with your charts. Your risk to reward has nothing to do with the trade. That is something you need to have pre-wired into your head. I already know I'm going to risk 40 pips for 100. And then you wait for those levels and you find that setup. As a swing trader, I already know I'm only risking 40 pips. I'm going to hold at least through 3 different zones. That's 300 to 500 pips. 40 pip stop, 500 pip reward. How many losses? I can have over 10 losses and 1 winning trade. Wipe all those out. A lot of y'all, I see 2 or 3 trades wipes your account. That's insanity. You're completely over risked, completely over leveraged. Why do you do that to yourself? It's the same thing. Like, nothing changes in the market. Nothing changes on what, regardless of what prop firm you use. If you're live capital, whatever it is, it's you. It's your fault. And you've got to take accountability for that. You've got to start going into it with the proper risk management. You've got to have that plan set in place to where I know, if I'm going to get into this trade, I already know I'm going to risk $300 to make $4,000. Simple math. I would risk 300 every day to make 4,000. That's an easy equation. All right. So we have our levels marked up. Now, going through the time zones, you can base depending on the higher time frame, the strength of the trend. Now, obviously, going to the monthly, we can see that gold has been on a massive bull run. We see this boom. Now, price has been playing back and forth sideways, but you see all these. Remember, you guys know I love using this little eclipse thing. We see price hitting here. We see price already tested these areas. I'm sorry, this one is absolute crap. There we go. Price tested this area 3 different times around 2036. Realistically, let's say 2066. So, for future, we buy, we hold, and we get rich off gold. That's how that works. Because you see all this sideways momentum. Let's just do this right here. And then here's the breakout. A lot of you guys love to use the breakout strategy. It's a beautiful, beautiful strategy. You guys are messaging me on Instagram. Gold's on crack right now. You see just the chaos that's going on right now. Gold is one of the biggest safe havens for all investors all across the world. Gold is one of the only, I don't even know how to use what I would say, not a metal, but it's like the fundamental whatever that you can go to any country, anywhere, and it's the same value. Like, everybody knows gold trumps everything. You go to you use $1, anywhere you go, it's a different value. Pesos, same thing. Like the yen, same thing. Swiss franc, same thing. Gold trumps it all, And if gold is reaching new highs, think about what's going on with the economy and in the world. The value of gold is going up. That means investors are kind of not necessarily in a panic, but they understand that something, whatever is about to happen, is going to be just chaos, and it's gonna create catastrophe, possibly with the economy. It could be where we've seen for the last 5 years the housing market go crazy. I've seen houses that were normally worth 200,000 in the last 3 years have been selling for $1 million to 800,000. 3-bedroom homes, 1,500 square foot. So that's my fundamentals when I look at what I'm looking for on gold and how I trade gold. I live in the U.S. I feel the economy. I feel the stress of where it used to cost $1,100 for a $400,000 house. Now you're looking at an easy $2 to $3 grand for an $800,000 house for the same exact house. So that's how I trade gold. That's my fundamentals. Again, we hold, we get rich off gold. Going into, okay, so we've got our zones. I know I get sideways. I'm sorry, y'all. We have our zones. We only trade with the trend. If you want to be a gambler, you can counter trend trade, but I'm sure you guys have experienced this many times before, that counter trend trading is not healthy for you. It's because you never know where the pullback ends. What I look for when I'm in a trade is I'm looking for continuation on my zones. And then when I hit those pullbacks, regardless, I don't care about drawdown unless it goes all the way down the entry, and then that second entry is a loss. That's okay. Because when I scale in, if I'm a 5 lot, then my second entry is going to be like a 0.75, because I am not going to risk my profits on my second entry. If my first entry is at 1824 and then my second entry is at 1900, I'm already, that's not realistic, but if I'm 200 or 300 pips in profit, my second entry, why would I risk all the profits I've made on my original entry just because I was wanting to get greedy? No, your second entries, when you're scaling in, lower them down to where you can handle the drawdown, and then that little tiny entry that you were thinking, oh, it's not going to make me nothing, could be an extra $400 or $500. You don't know. We don't know. So going in, we have our zones. I look for, once I see retracements on those zones, that's when I'm looking for my buys. So I'm not looking for a buy once price hits 2040. I automatically know we had our pullback here. We haven't had any pullback on these zones. So price could do this right here. Hits, not necessarily comes all the way back and then comes up, but you could at least look for some type of pullback. Once you see that pullback, don't worry about how to catch a falling knife. Just when you find that, when you see, okay, pretty significant pullback, I'm going to enter here. Doesn't have to be perfect. You guys try to snipe these entries and you want to be perfect. It doesn't exist. You're putting too much chaos into your trading already. Have your risk reward in play. If price respects this, comes back down, I'm looking for buys. I've got my 40 pip stop. Let's see, 2021. Let's go to, math is hard for me, so let's go to 2017. I think that's right. And then I have my reward. So entry 2021 to 2058, 300 pip reward. Easy. And then I have my zone, what I'm waiting for. Doesn't mean as soon as price gets here, I can just get a buy. It's up to you. What I look for is my break, hook, and go. So I already see my entry for this. Price broke, price hooked, price went. It's super simple, guys. Like literally, break, hook. The hook is the retest, and then price goes. Now, price can go sideways a little bit. Price can retest multiple times, but once you start scaling in on that entry, on that strategy of the break, hook, and go, you start fine tuning, like where I do my little ascensions, what I just did with those lines right here. I see the break, hook, and go. I have my zone marked up, and price breaks, plays around, and then you see the break, hook, go. Literally, zero drawdown, it's a game changer. You just got to put the number one thing, patience. You got to put it into your trading. I know you guys, a lot of y'all are struggling. We all are struggling. All of us, we all have our own things going on. We all want to be financially free, including me. I have bills. I got all that stuff too. It doesn't, regardless of what amount of money I make. The more money you make, the higher the bills get. That's how that works. So I understand. It's very easy once you see the capabilities of trading to go all in, because you're swinging. And if you want to do that, look for a brokerage or buy an audition, and that's the cheap. And your mentality is you are going to full gamble, and you're just swinging for the fences. Have that account on your longevity trade, on your I'm sorry, not on your trade, on your account, that you're looking for sustainability, that you want to live off of. You're looking for, when can I quit my job? When can I do this? Don't do that, because you want long term. Anyways, guys, I know I try to keep it under 30 minutes. I'm going to go ahead and cut this short, and then I will come back Thursday. We will go back over this. We will look into how price moved. And I post a lot of my stories, if you guys don't follow me, on Imperial FX Academy on Instagram, but also inside the Surge Trader Discord. I try to stay up to date with gold, and I post the trades that I'm looking at, stuff like that. But again, Thursday we will go back over this. Possibly could have a guest with me. We'll see how that goes. But I hope y'all have a wonderful week. Remember, I'm going to close with this. We are in the holiday season. Scale back. Don't try to be like, I don't even know how to say it. Just scale back a little bit. Don't blow your accounts, especially because it's worse. The worst feeling is going into Christmas knowing you blew accounts and you could have done this, you could have potentially done that. Scale back a little bit. Take a step back. Lower your lot sizes. It's okay. The market's not going anywhere. If anything, the market is finally getting pumped up. It's about to let the floodgates loose, because we've been going through this Biden chaos of crap for the last 2 years. And yeah, hope y'all have a wonderful week.